And my guess is what we're going to do is we're going to come down and test this level of two major trend lines that coexist here at around 18,200. That's going to be a technical bounce level, no doubt about it. But if we break that, then we head to that 15,600 level. You break 15,600, and then the next stop is that 12 to 13,000 level. So again, my projections are showing that eventually that will happen, likely by year end, and we should revisit that 12 to 13,000. I think the 10,000 break to 9,000 would be a case of the all-out bloodbath that would actually put in the bottom. As you think about how many people probably have stops right around 10,000, and that break point would create max fear, which actually is how bottoms are made.
Gareth Soloway, the chief market strategist of In the Money Stocks, has cautioned that Bitcoin and other cryptocurrencies may experience further downside. Speaking to Kitco News, the analyst ruled out claims that Bitcoin had reached a bottom when asked if the ongoing consolidation pointed to a rebound. Gareth Soloway believes there is more room for Bitcoin to the downside. Speaking to Kitco News earlier, Soloway, who correctly predicted Bitcoin's 2021 top, noted that Bitcoin could plunge to $9,000. The recent surge in the price of Bitcoin and Ether was driven by cracks in the banking system in the US and Europe, with the failure of Silicon Valley Bank and Signature Bank over the weekend. While Bitcoin's price movements continue to be affected by inflation and Federal Reserve rate hikes, it rose above $26,000, marking its highest level since June last year. Bitcoin price moves, however, are still heavily influenced by inflation and Federal Reserve rate hikes. Soloway said that I'm very short-term bullish, but you can't ignore the bigger pattern here, which is still bearish. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content.
Fiat system, the banking system, is actually helping make the case for why Bitcoin is a necessity here. And I think that that's something that we have to all kind of take note of, and then also say this is a major step. I think we're going to look back at this period and say this is one of the key moments why Bitcoin is now such a major asset in 5 or 10 years from now. So ultimately, do I think that the selling in Bitcoin is over? No, honestly, I don't. I think that in the short term, the fear in the banks caused a lot of money from banks to go into Bitcoin as a safety play. I also think that we saw USDC decoupling over last weekend. People said, hey, I don't even want to be in stable coins right now, so I'm going to go into Bitcoin as well. So I think that was kind of the reason for this latest move. I think once the financial system comes a little calmer, then you might see Bitcoin head down. And I still worry that if I'm correct that the S&P is going to drop another 25% or so from here, then I do think it drags, just by fear, it drags cryptocurrencies lower overall. Now, long-term, I'm a huge bull on Bitcoin, and I think I get classified as a bear because I've talked about a fall since 69,000. But long-term, I still love it. I think it's the future of the digital gold world. And I think that there's a real need, and we see it today. There's a real need for Bitcoin. I think you have to be looking at in the course of this year. By the end of the year, I likely think we'll at least hit 12 to 13,000. And the basics of this are that, number one, we have to still wait for regulation. So especially with the uncertainty, I mean, yes, the banking situation has pushed money in here, as has the USDC issues. But I think ultimately we have to remember that you're at a point where regulation is still keeping big money out, and that people are still subject to absolute fear. So where we start to see more and more panic selling in the markets, in the economy is starting to dip into recession, my guess is it gets sold across the board. So assets, maybe gold survives in that period and doesn't dump, but even during COVID, if we remember the COVID collapse, even gold dumped. And that's where I kind of think that we're going to see the big dump on Bitcoin flush down. I'm going to be waiting and nibbling kind of once we get in that sub 15,000 level, all the way down to 9,000 if it gets there.
According to Soloway, a prominent financial analyst, gold may be the top asset to watch in 2023. Soloway highlights the critical support level of $1,800 for gold, warning that a breakdown below this level could trigger a substantial downside move. Gareth Soloway also notes that gold has historically been a reliable performer during times of high inflation, providing a hedge against inflationary pressures that can devalue other assets like stocks and bonds. He further suggests that silver is in a bullish long-term trend, with strong support at the $25 per ounce level. While Soloway expects silver to increase over the next 12 months, he cautions that the market for this precious metal can be volatile. Soloway said, I actually personally think in 2023 you break out on silver.
For me, gold is putting in a bull flag that started in 2020. And at some point, this is going to bust out to the upside and have a big move up. If you look at the 1970s chart, this is the same pattern price. In fact, I'll show this real quick. So we had this start here in 2018 on the chart where we went up for 2 years to 3 years. We've now consolidated for 2 to 3 years. If we go back to the 1970s, we can see that same sort of pattern recognition during that inflationary period. Gold went up for 2 years to 3 years, consolidated, and then the next rip took it from about $110 to almost $900 an ounce. Now, again, I don't think it's going to go to do a 9x or anything like that. I think a 4x, 3x is probably more in line because people have an option of Bitcoin and crypto now. But nonetheless, the history is repeating here as the inflation numbers are repeating. If the thinking is like mine, that again, the economic situation is going to slow down, well, then the industrial side of demand is going to slow as well. And I think that's why you're seeing that underperformance in the near term here. But ultimately, it's still a metal. And if inflation stays high for a longer period of time, you are going to see silver rush up. And eventually it will outperform gold, like historically it has. It's just this period of uncertainty with the economy and likely recession is keeping it under wraps. I still like it as a long, though. I think for me, the pure play for being a protection player of my assets is gold. But if you want that alpha, I should say, that return, then silver is where you got to look, probably late second half of 2020. Yeah, so I think silver will likely test its highs. I don't see it breaking the $30 level this year. And the main reason for that is that industrial side. I think that keeps it from really breaking out. Now, granted, from $21.80 right now where silver is to $30 is still a tremendous return just to get back to those highs. But again, my guess is the breakout probably occurs in 2024.
On Tuesday, the U.S. Federal Reserve Chairman Jerome Powell's statement regarding inflation not meeting the Fed's 2% target caused a drop in the market. Powell told the Senate Banking Committee, although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. The latest economic data have come in stronger than expected, suggesting that the ultimate interest rate level is likely to be higher than previously anticipated. Previously, it was believed that the Fed would increase the policy rate to around 5.75% and not cut it until early 2024. However, with the current stress in the banking sector, rate markets are now predicting cuts as early as June 2023 and peaking below 5%. This shift in market predictions has caused a resurgence of recessionary outlooks.
I don't know how many more seizures will occur, but I do agree with him that inflation is going to remain elevated above that 2% mandate that the Fed has said is for the last year or so. To get inflation down from 9 or 10% to 5 or 4%, that's the easy one. That's like, you lose 10 pounds at the gym. To get that final six-pack, it's a lot of work. And that's where we are at this point, where, again, it's going to be very tough because, remember, wages skyrocketed. You had companies that were paying $10 an hour that now have to offer $20 or $25 an hour. They weren't able to pass that cost over to consumers day one. So what they're going to do to keep their margins in line and get those margins back is inch that into the consumer's pocketbook, essentially, over multiple years. And that's going to take some time. So you're going to be looking at elevated inflation rates. And again, we have to be ready for something probably around 3 to 3.5% for multiple years to come, which is the scariest thing of all, because now we're in a crisis where normally the Fed could be like, oh, well, let's lower rates to save the day. That can't happen now. They're basically at a point where, they could pause, but we just saw PCE numbers recently that were sky high. They can't be cutting rates yet. Wait, because remember, this is the kicker, is that we are going to go into a recession. There's no way around it at this point. I just think it happens in the second half. And then once we go into a recession, then these banks are going to be put under new additional pressure from economic issues.
Gareth Soloway emphasized in his previous interviews, we are about a year and a half into this bear market. This stagnation implies perhaps a year and a half of stagnation before Bitcoin shoots up to the moon again. That's all about today's analysis. What do you think of Gareth Soloway's predictions for gold and cryptocurrencies performance in 2023? Do you agree with his future outlook and why? Share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribe to our channel. We look forward to bringing you more updates in the future.